Hi, this is Mark Pizzacalla, and welcome to 3 Minutes with Mark for June 2025, special year-end tax planning edition. And there's a lot of things I could talk about year-end tax planning, but I'm only going to choose three things. The first thing I wanted to talk about was wash sales, and you might say, what are they? Well, the ATO's warned taxpayers to not engage in asset wash sales to artificially increase losses or reduce capital gains. Now, the way this typically works is that as a taxpayer, you may decide to sell cryptocurrency or shares just before 30 June, crystallize a loss, and then immediately after 30 June or shortly thereafter, reacquire substantially the same assets. That's called a wash sale because what you're doing is you're artificially creating a loss just before year end. Now, some people say, well, how is anybody going to know that I'm doing that? Well, the ATO's sophisticated data analytics can identify wash sales through data from registries and crypto asset exchanges. So it is possible to identify wash sales. The second thing I wanted to talk about was from a individual perspective is working from home expenses. Now you can claim working from home expenses using a fixed rate method of about 67 cents per work hour, and that rate includes the additional running expenses that you would incur for home and mobile, internet and data, phone usage, electricity and gas, stationery and consumables like printer cartridges. So that rate covers all those things, which means therefore that you cannot claim additional separate deductions for those things where you're using a fixed rate. Also, you need to make sure that you're writing down in a contemporaneous way the hours that you're working from home. So it's not like the old days where you can just do an estimate. You actually need to use in real time, write down contemporaneous hours that you're actually working, and you simply multiply the hours by the rate, and that gives you your working from home allowance. But contemporaneous documentation is the key. From a business perspective, just wanted to talk about, as we approach 30 June, we're looking at ways in which to reward staff, providing bonuses and or other benefits. Now, if you're going to pay a bonus, an employee bonus at year end, to qualify for a deduction, the business needs to be definitely committed to making the payment. So how do you do that? That can be done by passing a properly authorised resolution just before year end. So obviously for SMEs, that authorisation process is likely to be less complex, less formal than larger businesses, but nonetheless, you do need to follow an approved process and be able to demonstrate that that was a decision that was taken before year end and that the business definitely committed to. That's all I'm going to talk about today. There's plenty to talk about in June as we approach year end, but just make sure you're taking proper advice. If you would like to discuss any matters, by all means, give me a call. Speak soon.